Texas real estate, it was booming. Now it's busting. Across the Lone Star State, the real estate market is sliding, and in some of our most familiar cities, prices have crashed by over $100,000, or even a staggering 30%. Imagine losing six figures before you even unpack the boxes. Mortgage rates near 7%, skyrocketing insurance costs, and ballooning inventories are rewriting the rules overnight. Which iconic Texas cities are getting hit the hardest? And could this be the best chance in years to snag a house for pennies on the dollar? Stay tuned. Today we're diving into the top 10 Texas real estate markets crashing so fast. Number 10. Austin, Texas. Kicking off our countdown at number 10, Austin, Texas, the Silicon Hills of the South, a city once synonymous with endless growth, tech innovation, and skyrocketing demand. It often felt a world apart from typical market rules. But in 2025, even Austin, the golden child of Texas real estate, is feeling a significant squeeze. In 2022, the average home price in Austin was about $550,000. Fast forward to 2025, and it's plummeted to just $495,000. That's nearly a 10% crash, a tough pill to swallow for homeowners who bought at the peak, watching over $55,000 evaporate. What's driving this unexpected downturn? First, while Austin's tech industry remains robust, the hyper-growth fueled by remote work and massive corporate relocations has slowed. Layoffs at major tech firms and a general belt-tightening in the industry have impacted local incomes and job security. Combined with stubborn interest rates hovering around 7% for a 30-year mortgage, fewer people are eager to buy, especially with a median household income around $85,000, trying to afford homes still near $500,000. The housing inventory is also ballooning. Listings have surged by over 40% in just the past year as new construction from the boom times floods the market, and sellers face a drastic drop in buyer enthusiasm. Homes are sitting on the market an average of 100 days, nearly double what they did in 2022. It's a recipe for aggressive price cuts and desperate sellers. In 2022, buying a house here might have cost you around $550,000. Now in 2025, you could snag one for nearly $55,000 less. For investors who bought high, it's a painful reality check. A stark reminder that even Austin's once invincible market isn't immune to a slowdown.
Number 9. Corpus Christi. This coastal city, famous for its beaches and naval air station, was a hotspot for vacation homes and a growing local population. But in 2025, the housing market here feels more like a ship running aground than smooth sailing. Back in 2022, Corpus Christi's average home price was around $290,000. Fast forward to 2025, it's tumbled to $250,000. That's a hefty 13.8% drop. Why is Corpus Christi struggling? A big factor, as with many coastal cities, is skyrocketing homeowners' insurance. After several active hurricane seasons and persistent flood risks, premiums in Corpus Christi have exploded. In 2022, typical annual premiums were around $3,000. Now many homeowners are paying $6,000 or more, with some policies becoming nearly impossible to secure. This alone is pricing out many buyers, adding hundreds to monthly costs. Furthermore, while tourism is a cornerstone, a slowdown in domestic travel spending in 2024, 2025, and new short-term rental regulations have cooled investor demand. Listings for beach houses are way up. Inventory has surged about 28% year over year. Meanwhile, higher mortgage rates, still above 7%, have also priced out second home buyers and general buyers, especially with a median household income around $65,000. Corpus Christi's charm remains, but financially, this market is facing stormy waters where insurance costs are a major break-in deal. Creeping into number 8, El Paso, Texas. This unique border city, rich in culture and home to Fort Bliss, was once considered a consistently affordable and stable market. But in 2025, even El Paso's resilient housing market is feeling a significant tremor. In 2022, average home prices were around $260,000. Now in 2025, they've slid to $225,000, about a 13.3% drop. El Paso's economy is distinct, heavily influenced by its military presence, cross-border trade, healthcare, and manufacturing. While these sectors provide stability, wage growth hasn't kept pace with the rapid appreciation seen during the national boom. This has created an affordability gap, especially for local residents with a median household income around $55,000, who are now feeling the intense pinch of persistent 7% mortgage rates on homes that, even at lower prices, are still a stretch. Adding to the pain, a growing inventory of homes. Listings have increased about 28% in just 1 year, while buyer demand has softened considerably as the economic landscape becomes more uncertain. Homes now sit on the market for an average of 88 days, up from just 45 days back in 2022. Property taxes, already high in Texas, are a significant burden here, averaging over 2.4% in some areas, which means annual tax bills can easily exceed $5,400 on a $225,000 home. This, combined with general rising living costs, is leading many potential buyers to hesitate. El Paso's market is softening, proving that even a city built on steady fundamentals isn't immune to a broader market correction.
Number 7. Frisco, Texas. This gleaming northern suburb of Dallas was once the undisputed poster child for corporate relocations, high-tech jobs, and luxury suburban living. Its growth was astronomical. But in 2025, even Frisco's seemingly untouchable housing market is experiencing a harsh reality check. In 2022, average home prices here hit about $680,000. Fast forward to 2025, they're down to $595,000, about a 12.5% decline. So what's happening? Frisco's explosive boom was intrinsically linked to massive corporate influx like Toyota, Liberty Mutual, JP Morgan Chase, and an insatiable demand for high-end homes. However, the sheer pace of new construction, particularly in sprawling master-planned communities, has created a significant oversupply. This massive build-out, combined with a general slowdown in corporate expansion and persistently high 7% mortgage rates, has choked off the pipeline of high-earning buyers. Even with Frisco's median household income around $130,000, a $595,000 home with a 7% mortgage means monthly payments nearing $4,000, a heavy lift. Inventory has surged about 38% year over year, flooding the market with homes from grand estates to luxury townhomes. Homes are sitting on the market longer, averaging 85 days, a stark contrast to the bidding frenzies of just a few years ago. Affordability, once a distant concern, has become a major issue. Plus, Frisco's notorious property taxes, averaging 2.2% or over $13,000 annually, add another crushing layer to home ownership costs. Frisco's allure remains strong, but its housing market is facing a significant, painful correction from its unsustainable boom. Number 6, Fort Worth, Texas. The cow town of Texas, a bustling urban center that saw immense growth in recent years, becoming a magnet for new residents. But in 2025, Fort Worth's housing market, much like a tired rodeo bull, is hitting the ground. In 2022, average home prices were about $390,000. But by 2025, they've dropped to $330,000, a significant 15.5% nosedive. Fort Worth's growth was fueled by its affordability relative to Dallas, its strong job market in logistics, transportation, and diverse industries, and a continuous influx of out-of-state buyers. However, the sheer volume of new construction, particularly in its sprawling suburbs, has created an oversupply that demand simply cannot match in the current economic climate. This rapid expansion, combined with stubbornly high 7% mortgage rates, has made home ownership less attainable for many, even with a median household income around $170,000. Inventory in Fort Worth is swelling like the Trinity River after a storm. Listings are up 38% year over year, and houses are sitting an average of 75 days before getting any real offers, a dramatic increase from its rapid-fire sales just a few years ago.
Even with prices dropping, higher interest rates mean monthly payments aren't as low as buyers hope. Plus, rising property taxes and insurance premiums add to the burden. For buyers, it's a chance to scoop up property at a discount. For sellers, they're stuck in a sluggish market hoping for a rebound that might not come soon.
Number 5. Irving, Texas. Home to the bustling Las Colinas business district and a hub for major corporate headquarters, Irving was once a beacon of DFW's economic might and a magnet for diverse professionals. But in 2025, even Irving's strategically central housing market is cracking. In 2022, the average home price was around $420,000. Fast forward to 2025, it's fallen sharply to $365,000. That's a painful 13.1% plunge. Irving's growth was fueled by its proximity to DFW Airport, major corporate campuses like ExxonMobil, and a constant flow of business activity. This attracted a strong professional class. However, the rapid development of new multifamily units and a softening commercial office market have created an oversupply in specific housing segments. This immense supply has met a residential market constrained by stubbornly high 7% mortgage rates, pricing out many potential buyers, especially with a median household income around $75,000. Inventory has exploded. Listings are up 38% compared to last year, and sellers are slashing prices to move properties. Homes that once generated quick offers now sit for an average of 75 days. Property taxes in Irving are notoriously high, averaging 2.3% or over $8,400 annually on a $365,000 home, adding significantly to the cost of ownership. Plus, with many buyers using adjustable-rate mortgages during the boom, as those reset, monthly payments have spiked. This creates a flood of listings from overstretched homeowners. Irving is still a vital economic center, but for now, its housing market is ground zero for a significant urban slowdown.
Dropping into number 4, San Antonio, Texas. Known for the Alamo, its historic Riverwalk, and rapid population growth, San Antonio was touted as one of the most affordable big cities in Texas. But in 2025, its housing market is facing a painful reality. In 2022, the average home cost $330,000. In 2025, it's $290,000. That's a significant 12% drop. San Antonio's boom was driven by military growth, a growing tech sector, and continued in-migration seeking affordability compared to Austin and Dallas. However, the city's median household income, around $62,000, simply couldn't keep pace with the rapid price appreciation. Even at $290,000, high mortgage rates at 7% make payments a stretch for many local families. This affordability wall is a major factor in the market's decline. Inventory has surged, up a considerable 35% from last year. More homes are hitting the market than buyers can absorb. Homes are languishing on the market for an average of 85 days, often with multiple price reductions. The city also saw significant new construction in its outer rings, adding to the supply glut. While San Antonio offers a rich culture and history, its housing market is now burdened by affordability constraints and an imbalance of supply and demand.
Number 3. Houston, Texas. The energy capital of the world, America's 4th largest city, a sprawling metropolis that often felt recession-proof. But in 2025, even Houston's colossal housing market is beginning to feel the weight of oversupply and economic shifts. In 2022, the average home price was around $380,000, but by 2025, it's down to $330,000, a solid 13% slide. Houston's market is inherently tied to the global energy industry, which faced a softening in 2024. While diverse, the impact on higher-paying oil and gas jobs creates ripple effects across the economy. Furthermore, Houston has consistently built new housing at a rapid clip, leading to an oversupply, especially in certain segments like luxury condos and new subdivisions on the outskirts. This robust supply, combined with persistently high mortgage rates at 7%, has tilted the market heavily in favor of buyers. Inventory is stacking up fast across the metro. The number of homes on the market has increased by 40% in just a year, and properties are sitting unsold for an average of 70 days. Sellers are dropping prices, with many homes seeing cuts of 5 to 10% just to generate interest. The city's vast size means varying impacts, but the overall trend is undeniable. While Houston remains a major economic engine, its housing market is grappling with the consequences of overbuilding and a more cautious buyer sentiment, facing a significant correction in 2025. Number 2. Marfa, Texas. This tiny, enigmatic town in West Texas, famous for its minimalist art installations, mysterious lights, and bohemian allure, became an unexpected darling for niche investors and artists seeking a unique escape. But in 2025, Marfa's once booming, cult-favorite real estate market is seeing its own artistic vision crack. In 2022, the average home price here, surprisingly high for its size, soared to about $450,000. Fast forward to 2025, and it's plummeted to just $320,000. That's a staggering 28.9% crash, a brutal reality for those who bought into the dream at its peak. What's causing this dramatic downturn in such a unique locale? Marfa's boom was largely fueled by out-of-state buyers, drawn by its quirky charm, and perceived investment potential as a high-desert retreat. However, this niche market is highly sensitive to shifts in discretionary spending and investor confidence. With stubbornly high interest rates near 7%, the appeal of a remote, high-priced second home or art gallery investment has sharply diminished. Many are finding the cost of capital no longer justifies the distant dream. The housing inventory is swelling dramatically for a town of its size. Listings have surged by over 50% in just the past year, and both overextended investors and opportunistic sellers flood a suddenly shrinking buyer pool. Homes are sitting on the market for an agonizing average of 150 days, a virtual standstill compared to previous years. With the median household income hovering around a very low $40,000 for local residents, the market was always disproportionately reliant on external money. That external money has dried up, leaving a stark affordability gap for the community that actually lives there. Marfa's allure remains, but its housing market in 2025 is learning that even art cannot defy economic gravity indefinitely.
Number 1. Dallas, Texas. Topping our list as the Texas city with the most severe housing market tumble in 2025, Dallas, Texas. The gleaming heart of North Texas, a magnet for massive corporate relocations and a symbol of Texas's boundless economic might, Dallas was, without question, one of America's fastest-growing real estate markets for years. But in 2025, that relentless expansion has turned into an equally painful contraction, leading to a monumental crash. In 2022, the average home price soared to a staggering $580,000, but by 2025, it's collapsed to $450,000. That's an astonishing 22.4% plunge. Dallas's boom was the poster child of corporate flight from expensive coasts and a seemingly endless expansion of jobs in finance, tech, and logistics. This drove prices up dramatically, often by 60–80% between 2020 and 2022. Developers, eager to capitalize, built at a furious pace across the sprawling metroplex, leading to a massive surplus of luxury homes, new subdivisions, and urban condos. But now, with a general economic slowdown affecting corporate expansion plans and stubbornly high 7% mortgage rates, demand has simply evaporated for large segments of the market. The relentless pull of high-paying jobs has diminished, and the remote work tide has also receded for many. This combination has caused buyer demand to evaporate. Inventory has skyrocketed, up an astonishing 58% year-over-year across the Dallas metro, leaving sellers desperate and resorting to drastic price cuts. More than 45% of listings have seen reductions, with slashes of $80,000 to $120,000 becoming commonplace, particularly in the highly built northern suburbs. And the relentless 7% mortgage rates mean that a $450,000 home now costs over $3,000 a month to own, far out of reach for Dallas's median income of around $76,000, especially with average property taxes exceeding $9,500 annually. Dallas, once the symbol of unstoppable growth, is now its most poignant cautionary tale. Overhyped, overbuilt, and overpriced, it's crashing harder than almost anywhere else in Texas.
This has been a sobering look at the 2025 Texas housing market, a brutal reality for many homeowners across the Lone Star State. The once unthinkable price drops are no longer just a fear, but a painful, tangible reality. For years, the dream was simple: buy a home, watch it appreciate, build wealth. But now, for countless Texans, that dream has been sharply redefined by erosion of equity, banishing bidding wars, and the stubborn weight of high costs. The power dynamic has fundamentally shifted. Sellers, once commanding top dollar, now face agonizing decisions, forced to slash prices and offer concessions just to find a wary buyer. And buyers, though theoretically in control, are wrestling with mortgage rates that stretch budgets to their breaking point, even with falling home values. This isn't merely a market correction, it's a profound recalibration, reshaping financial futures and forcing a reevaluation of what homeownership truly means. The long-term implications are vast, from retirement plans built on home equity now in question, to families struggling with property tax bills on homes worth less than they paid. The ripples of this downturn will be felt for years to come. What's next for the American dream of homeownership in Texas? Only time will tell if this period of turbulence paves the way for renewed affordability, or if it marks a more fundamental, lasting shift in the landscape of our most cherished asset. For now, strategic thinking, patience, and a keen eye for true value will be paramount. This has been Discover the Nation.